Okay, so we left off on loan to value. And I was telling you that they do 100% financing and 110 financing for a new purchase for rehab. So that's amazing too as well. So even though they do 100% financing, a lot of times these videos that people are doing do not tell you that you will need reserves. Reserves is money that you have for your property taxes and your homeowner's insurance. And sometimes you have to pay for a HUD inspection. So those things, your mortgage counselor will go over with you to let you know. But again, remember I was telling you they have a savings program where you could put your money into to begin to save, so that when the underwriter go through the qualifications and she look at your bank statement, she will see that you have reserves. Then the reason why they ask for reserves is to give you that cushion just in case something happened, so that you are able to pay your monthly mortgage payment. Don't forget, your monthly mortgage payment is not the mortgage payment in itself. It is your 30% of your income that you receive annually. You divide it by 12, and then that 30% goes towards your principal, so that your mortgage can be paid off quicker. That's amazing. So here go some criterias that is needed, which is, this one is really good. You don't need a credit score, none whatsoever. However, even though you don't need a credit score, you do have to have a payment history of at least 24 months, but they only going to focus on the 12 months of on-time payments. So if you pay your rent, your cell phone, things like that, you will have to make sure that it has been paid for 2 years straight. Even though they're going to concentrate on the last 12 months, it's still good to have those 2 years. I explained to you all, so no credit score, no credit score, no credit score. So I explained to you all about the interest rate. So that's below the market. Yes, that's below the market. You could also do a buy down, but don't worry about trying to buy down your interest rate, because they do the below the market rate. So the market rate right now is at higher sixes, right? Even though they're supposed to be dropped, but so right now they're at the highest of like 6%. And then with the market rate, so NACA will go like close to 5, maybe even 4, I don't know. But they go below the market rate. Okay, and the term of your amortization. Your mortgage term is 20 to 30 years. Again, if you do a 20-year, your mortgage payments will be paid by the program, and you will pay your 30% what goes towards the principal only, and that's how you get to own your house free and clear quicker. Property types: single family residence, multifamily residence, condos, and co-ops. New construction or existing. You could do a manufactured home. Really is a modular home. Now, when I did some studies and research, I didn't see multifamily, but I did see single family residence, condos, and co-ops. Don't do a co-op. You want to not share the apartment building and stuff like that. With the co-op, you more like you co-owning the apartment, you co-owning this. With a condo, you own your apartment, your unit, but it's the inside walls that you own, and the outside walls is for the homeowners association. And then your single family residence is just a beautiful home that you pick out. Okay. Again, the mortgage payment is paid by the participants, and then you pay 30% of your income. So don't forget that. And that's your gross income. I got some more good stuff. Debt to ratio. Your debt to ratio for your monthly liabilities, and you divide that by your gross income, is 43%. Now that's like FHA, they go up that high, and VA. So your debt to ratio, and debt to ratio only means the debt, your monthly debt that you owe, is at 43. You can't exceed over 43. I'm so excited. So your employment, you have to have a 2-year employment history. They're gonna look at the 24 months of your mortgage. It doesn't matter if you are retired or disabled. Yes, if you are retired or you get Social Security or disability, you qualify as well if you have a housing choice voucher. Yes, you could buy a home too, boo. Yes, you can. So the 24 months of your employment is going to be looked at. Your income. So they're going to do like a 1 month pay stub to check your income. They also probably ask for like a W-2. They may ask for that too, because some of these things are standard in the mortgage industry, but lenient in NACA. Charge off. They say you don't have to address them. However, if you have charge offs, what I studied, like for the within the last 12 months, 24 to 12 months, no, that's collections. So charge off, you don't have to address, but the collections, if you have collections on your credit report, get rid of them. Go to my bio and get that $2, $3.33 templates. Yes, get that crap off your credit. But anyway, for collections, it have to be resolved within the 24 months or a approved payment plan. So if you have collections, they are going to look at the collections for the past 24 months. Get them collections off. Easy peasy. Inspection. You have to have a HUD inspection. And that's whether you doing a program or a non-program. It's the best thing for a person who wants to purchase a home should do regardless, is to order a home inspection. Then that way, whatever, and it's not the same as an appraisal. Home inspection is different. It's when they go through the nooks and crannies and make sure like your house is stable, the foundation has no cracks, there's no leaks, the plumbing is good, the electricity good. Those are what is needed. That will come out of pocket too in your escrows. So don't forget, your mortgage counselor at NACA will explain that to you with regards to, but don't forget that you would need it. So this is the requirements for you, the home buyer. So you have to be, of course, a home choice voucher recipient. And you must meet all the requirements for that, for your Section 8. Payment history. You cannot be in default on your rental housing payment. You must have 12 months on time rental payments through your HUD Section 8 housing voucher. 12 months to be on time. Your family needs to have that stability. The stability meaning like you didn't bounce here and there with your Section 8. Okay, part 3 coming up.